did that for 17 years. Then went to corporate world for a while, hung out with Gary Keller and all the guys up there in Austin, and had a good time there. And when I came back, I decided to start the insurance company. That was several years back. What's turned out to be really cool is talking to people about insurance and really being able to talk to people in depth about the condition of the home or about the purchase. Because when I talk to people, they're in the middle of this massive transaction. For the most part, they're buying a new home, and they're freaking out to some degree. So it's been a lot of fun, and it really, I think, it has enabled me the opportunity to educate people about insurance. And coming from KW, education is a big deal, and that's just kind of burned inside me. So I really appreciate the opportunity just to share some thoughts about insurance today.
Well, I appreciate it. I know you've helped me and my family for a couple of years now, so we really appreciate it. All of your advice and all of your help, and our clients. We have a lot of clients that we've sent your way, so everybody's
definitely
been
thank you.
super happy. So we really appreciate that. First, tell us a little bit about just insurance in general. It seems to be a really confusing topic. I've shopped around for insurance, personally, and sometimes the difference in quotes are a lot, hundreds, if not $1,000, just between one company and another. What are the differences, and how can one company do it so inexpensive compared to some of the other companies that are charging so much?
That's a great question. It's kind of complicated in a couple of different ways, but I guess if you think about what I like to think about it, every insurance company is kind of like a middle schooler. They're misbehaving, they're kind of wild, you just never know what they're going to do next. And I say that because every company is different. Number one, while the policies have a similar framework, in other words, there's a policy called a HOA, there's a policy called a HO3, there's a policy called HOB, etc. And those policies, the framework of them are same company to company, but each company has their own ability to modify almost anything. They can lower the limits, they can raise the limits, they can make something ineligible. They can do all kinds of things to create a policy that they believe they can sell, that people want, and that they can make money with. Okay, so that's kind of the framework of why does each company have a slightly different or a little bit different policy available. So then once they start selling that policy, they attract business by lowering the price in certain areas. So let's say that Progressive needs more auto in San Antonio, specifically in the north side, so 78258, they can literally go in and lower the price to attract more business in that area. And conversely, if like USAA a couple years ago, 2016, when we had that massive hailstorm, USAA had too much risk in San Antonio, especially heading down I-10, and that's where that hail hit. I don't know if you remember that, like in Helotes and down IH-10, that area looked like a war zone because those softball size hail destroyed tile roofs, metal roofs, everything. And so if you talk to USAA right now, all of their home prices are sky high in this area. They're 50% higher, 30 at least, maybe 50% higher than some of my best prices.
And I know
so they're trying to get rid of.
I priced mine out through USAA, and it was a lot more expensive.
Yeah, exactly. That's right. We did that when we raided your house.
Right.
So that's how companies move their risk around, right? They're trying to balance out their risk because they know they're going to pay claims, right? They all know sooner or later we're paying claims, but they want to keep that down to a minimum. And how they do that is, I always like to think of this. There's some guy with really thick glasses. He has, a wall full of computer screens, and he's looking at all the numbers, trying to figure out, okay, how can we do this so we can make a bonus this year? And they're figuring out raise prices here, lower prices here, change the wording in the policy a little bit here, make this ineligible. And that's literally how it does it. So now if you imagine there's all these companies and they've all been doing that since they started. tweaking this, tweaking that, tweaking this. As a result, today, when I run a quote for, let's say, for any house, just the next house you sell, I'll have 30 prices on my screen once I submit for the first quote, and one might be $800 and the highest one might be 4,000.
Wow.
And that simply is a matter of all these companies are trying to attract or dispel certain risks in order to make a profit.
And you know, the policies are so encompassing. How do you really judge the $800 one from the $4,000 one to make sure that you're not missing some vital coverage?
So from my perspective, it's this what I do, right? So I know the companies, I know their deliverables. From a consumer perspective, you have to be very, very careful, because every company presents a quote, right? If I email you 3 quotes and you looked at all 3 side by side, you would have to figure out and decipher each one individually, because there's no format. There's no, hey, all quotes should look just like this. So my rule of thumb that I advise my clients is, if you don't see it written, if you don't see a coverage written, then you need to assume it's not there. Assume it is not included, especially if you look at the top, somewhere on the top of the form, it'll say HOA or it'll say HO3. It might say HOB, although HOBs are a little more rare. Like State Farm, Allstate, they're all HOAs. And it's so when they're an HOA policy, you really need to be able to see replacement cost, water coverages. They should all be listed on that quote, because if they're not, then you don't have them. And if you're not sure, then ask the agent, hey, is foundation water included? Is sudden and accidental water included? You know, tell me what water coverages do I have, and ask questions. I mean, if that's the only thing that comes out of this meeting is ask questions, because if you start assuming something's included, it might not be.
And that's the thing, is most people don't know until they call their insurance agent and say, this happened. And they're like, oh, you either have coverage or you don't, you know, that's
exactly. Well, I had a guy last week, actually, Matthew Gonzalez. He's actually an agent at KW. He had a leak in his shower stall. The tile showers that have shower pans underneath the tile, and that's what keeps the water from leaking, not the tile. The water actually gets past the tile, and so there's a pan there. Well, his pan gave out, and that kind of leak is a very slow leak. It's gonna slowly get out a little bit at a time until eventually you find a problem. Well, he found a problem underneath his wood floor. All of his friends said, there's no way that's covered. That's a slow leak. Nobody covers that. And he's like, well, my agent told me it was me. And he kept saying, well, and then he called me up. Is it covered? I'm like, yes, you actually are, because I insured him with the company. He's actually insured with Travelers. And I added what they call slow leak. Slow leak, Allstate doesn't even have it available. I think State Farm does, but you have to add it. I know that USAA has it, but again, you have to add it. So it means any leak that takes longer than 14 days on average to notice. That's kind of the technical term that they use, seepage. Anyway, so it's just really important to ask good questions whenever you're purchasing a policy.
That kind of goes into what my next question was. I know that you can purchase flood insurance, basically, even if you're not in a flood zone. Sometimes it's good to have flood insurance. Now, let's say you didn't have that seepage insurance or that slow leak insurance, but you had flood insurance. Does that cover it, or what is flood insurance good for other than natural, rain and things like that, flood?
So flood insurance, what flood is defined as water rising on the outside and entering the home on the ground from the outside. So that's flood, and that's the only thing flood covers, is water outside rising and entering in. Now it could be water from a broken main. If a broken main outside, flooded, you made water flow down or up to your house and into your house, totally covered, because that is groundwater rising, entering your home. But typically, obviously, we think about it as raining, and then water comes in. And that's true. So here's the interesting thing. So if you got rainwater that rises on the ground and enters in your house, not covered. But if it comes in through your roof, it's covered. If a tree falls over and hits your window and knocks a hole in your window and all that water comes in through the window, that's covered. If your water pipe bursts, that's covered. That's called, all of those are called sudden and accidental. Most policies do include sudden and accidental almost across the board. That's kind of one of those standard coverages that hardly anybody skips. Now, there are some companies, there's a company called Wellington, they limit that to $10,000. And the average water claim is $11,000. So not good. Got to be careful about that too, because they do, some companies under certain conditions will actually limit water, such as there's a company called Homeowners of America that at the year 35, when the house becomes 35 years old or older, then they limit their total loss on a water claim to $20,000.
Oh, wow.
Yeah, there's just things like that every company is different.
Huh. Interesting. See, Paul has his hand up. Paul, do you have a question?
Yes. Can you hear me?
Yes.
Yeah. My question is for Danny is, if you have flood insurance, and you know how it has from the main line pipe from the house to the street, is that covered under normal homeowners insurance?
So no, unless it's endorsed. So there is no policy I'm aware of that includes that automatically. This is called service line. So the service line coverage, which is available by quite a few companies, are now adding it or making it available. And it's usually not expensive. But so they call service line coverage is defined as any service line that goes from the street to your house. And so that means it could be pressure water supply, sewer, gas, and it also includes electrical. So if you have an electrical line that is providing a service to your house, all of those are covered under service line protection that is added. With, again, not available with every single company. I know we have at least 4 companies I know for a fact have it available, and we've been told that a few companies are going to be adding it soon. It seems to be popular. And that's one of those things that companies find out, like, oh, this hardly ever happens. Let's add it and charge $15 for it. So if we sell, if we sell 10,000 properties, that's $150,000 we can make, because we'll probably have one claim out of 10,000.
Yeah, that's kind of
how it works.
We had a client that it burst, and it was $25,000 to fix it.
Typically, the service line is actually limited to 10,000. The average service line claim, according to what I've been told, is 6,000. So 25,000 that's something. That must have been
they had a trench from the street underneath the house.
Ooh.
And then, because they had two cracks in the line, and it came from somebody doing a pressure test, a hydrostatic test, and it blew out the main line of the house. It was a cast iron line. So the people that were doing their inspection said, hey, it's not our problem. We're not responsible for it.
Yep.
And then the seller said, well, we're not responsible for it. And it just went back and forth. But really, technically, the seller is responsible for it, because there's a form you're supposed to sign that allows you to do it or not do it.
Right, exactly.
And they didn't do it. But the seller was on the hook for $25,000. So is that something we should all have covered in older homes that have cast iron, if it's so cheap?
Yes. I mean, I think if it's available with the policy that you have, you should definitely just select it. I know that every policy I've sold with Allied and Anchor, those 2 companies, I automatically include that, because it's part of a package and it literally costs nothing. And then we, with the other companies, when they have it, we do mention, we always let people know, hey, this is something that's available.
Yeah, because from our house particularly, it's probably 150 to 200 yards from the house.
Yeah.
So if you had to fix that pipe, you would have to dig from the street to the house 200 yards.
Well, if you had to replace it. So the only reason they had to replace all of it, because it was cast iron.
Right. And they said they had to. So if anything, the gentleman told me anything from 1977 or 8 down is probably going to be cast iron. Anything in the 80s is going to be not cast iron.
PVC.
Right. He said, so for the people that are buy houses in the 90s, you pretty much don't need the coverage. But anytime you get those old eclectic homes, you're probably better off getting that coverage.
Yeah, I would agree. And now, interestingly, a lot of the companies that offer that typically they don't rate well with older homes. So like Allied Trust, who gives you that coverage, I wouldn't cover. I mean, at age 40, I just don't sell Allied Trust for anybody's home that's older than 40 years old, because they get super picky and their inspections are horrible, and it's just not worth the effort.
Gotcha.
And they create that policy in such a way. They actually, that company, with the way that they have eliminated older homes, is they have galvanized plumbing is ineligible. And of course, they've been using galvanized, from right around the early 80s, maybe late 70s, they stopped using galvanized and really went to copper primarily. And now they're into PEX. So things change all the time.
Right.
Interesting. I know a lot of people feel like they need to go with the big name companies, people that they've heard, State Farm, USAA, Allstate, all of these companies. And some of the companies you've just mentioned here in the last few minutes are ones that I personally have never heard of. I don't know if anybody else has heard of. What is the advantage or disadvantage about going with some of those big name companies versus these smaller companies?
Well, one of the most important ratings is the AM Best or the Demotech ratings, to find out where a company is financially and with regard to customer service. So if you go there, like, you can go online and pick out reviews. And of course, nobody likes insurance companies, so everybody's reviews are bad. So I don't know if anybody likes any of them, most of the time. But for the most, if you go to the rating is a deep dive into their financials to make sure that they're going to be around. And then they also look at their net promoter score on their feedback, because they want to make sure they're not that they're upholding a level of service. So when you look at the big companies or the companies that are well known, and the reason they're well known is because they typically do everything. So like Allstate, we call them a captive company. Allstate is they sell the policy, they handle the claims, they handle everything. So it's all done in-house. In other words, I don't have the ability of selling Allstate. Now, interestingly, I can sell a company called Encompass, which is owned by Allstate. So it's actually very, very similar. Encompass is actually an excellent company too. Matter of fact, I'd rather have an Encompass policy than an Allstate policy, because it's a great policy. Anyway, that's a long story, but to get into finer details. But so State Farm, Allstate, Farmers, and used to be Nationwide. This isn't. We're all used to be. We sell it. We maintain it. We handle everything. Mm-hmm. USAA does that as well. They're a little different in that USAA doesn't have agencies all over the place like Allstate and State Farm. USAA is in-house, like Geico. They're down the street. They may have some other locations, but they're all employees. Whereas Allstate and State Farm have agents who have their own businesses. So ultimately, when you think about those companies, when you call them, they ought make you one offer. This is our policy. Here it is. So, well, I'd like an HOB, Allstate. I'm sorry, we have an HOA. That's what we have. And then we add this endorsement, and it makes it a lot like an HO3. If you want an HOB, you can't get it from them. And so what they essentially make one offer, and that's it. When you call agencies, which is like, we have Travelers, we now have Nationwide. Nationwide used to be in-house, but they've actually switched they've made all their local offices turn into franchises, and they're now selling all kinds of policies instead of just Nationwide. So they've realized that our method actually works better. It's better for the client. When you call me or somebody like me, I have 30 companies. They're all A-rated. We don't work with anybody less than A. And I'm able to compare 30 quotes and say, okay, as of right now, this company really likes you and they're giving you a good price. And so I'm going to recommend them right now because I know their policy. I know that it's good. Here's the weaknesses. They don't cover animal liability, or they don't cover trampolines, or they have a low limit or whatever. And I go through that. So that way I can actually find out who's really going to be the best policy for you right now in today's market. Now that might change in 3 years. So you might call me back in 3 years and say, hey, it went up, can you check and see if somebody's better? And sure enough, I can do that real easy. And that's what agencies do. Agencies actually, the vast majority of the companies I work with do not sell their own insurance at all. The very, very few that do is Progressive. They actually have their own in-house and they use agencies. I think that might actually be it. There's not a whole lot of them where we have a direct competition with them. So I in effect, Flo is my competitor. So.
Awesome. So in saying that, so is it a good idea to shop your insurance every year and get it requoted every year or every?
I would only say, I would say only if it goes up. I mean, if it's the same price or really, really close, $20, $30, you're better to stay. And here's why. There's, you're familiar with credit score, of course, right? Okay. So insurance companies actually use an insurance score. And it's very similar to credit score. It's tied in very, very closely. It uses some of the same data, and it actually uses your social security number, although I don't have to get your social security number necessarily. It's easier if I get it, but it's not necessary. They have what's called an insurance score, and one of the major factors of the insurance score is how long do you stay with your insurance companies? And when you stay 3 years or longer, you get the best rates. When you hop from company to company to company, you actually get penalized for that.
That's interesting. Is that the same? I know you do auto insurance too. Is that kind of the same on auto insurance?
It's the same. I was talking to one of, it might have been one of your clients, trying to remember their name right now, but the conversation was interesting because I said, well, look, let me see if I can save you some money on your auto as well. He'd already fell in love with the home policy I presented. And he said, oh, well, I just moved it. And I was like, well, then never mind. We shouldn't even shop it. He goes, what do you mean? What if you can save me money? I said, well, it might hurt you because if we switch after you just switched 6 months ago, that's actually going to be a ding on your insurance score. And so he was really grateful and told me he appreciated that I was honest about it. And I just told him that was just the way I was raised. You just tell people the truth and let the truth take care of itself,
Right. Exactly. No, that's interesting to know because I know a lot of people who shop every year, and it's been told, people say it all the time, shop every year, all of your services, cable, insurance.
Yeah. Well, I would say only if I did have a guy, maybe it was last week, he called and his renewal came in like $600 higher than the year before. And it was his first year. This was his second or his first renewal. And yeah, absolutely. I was like, yes, let's go look. Because that's not, I don't know. I mean, I don't know what happened that caused them to increase $600 in 1 year, but that's completely unreasonable. There's no reason to stay for that. I'm only saying that if it's $40, $50, maybe $100, depending on if it's a $700 policy and it goes up to $8, okay, that's a big jump. But if it's a $2,000 policy and it goes up to $21, well, I wouldn't sweat it. Because you're in the long run, staying with the company is going to end up giving you a better overall insurance score. Again, provided that they're not, provided it's a good policy, they're good people, they're treating you right, and nothing else, all other things being equal.
Right. Policy, you have a question?
Oh yeah, now that we're on car insurance. All right, so Danny, I have some issues. So, I have some real issues. So we have Geico. I have Geico. And I have my motorhome under Geico and my car under Geico. Well, I had an accident with the motorhome and it was hitting a pole. So obviously there was no damage really to the pole, but it was like X amount of damage to the motorhome. Then I got in a crash with my Tesla, which was not my fault. And the insurance company gave me back my $1,000 deductible because they fought it out with the other people's insurance company.
Oh, good.
Okay. Well, yesterday I destroyed my $60,000 Tesla.
Probably totaled.
And it was my fault. So absolutely it was my fault. So I just got a call from my insurance advisor. Now they're all claiming that they're injured, but nobody was claiming that they were injured yesterday. So she's handling that. She's like, yeah, we'll get to the bottom of that. Don't worry about it. I've been with Geico for probably 15 years. But from speaking to the agent, she's like, we're probably going to drop you.
Yeah, I was going to say, I don't think you're going to make it at 16.
Right. So what do I do?
Sorry.
I mean, it is what it is.
Oh, Danny. Let Danny beg and plead that Danny finds you something.
Yeah.
Or
well, I mean, that's going to be not fun. That is going to be an unpleasant experience.
Right.
Because, I mean, okay, Paul, let me ask you this crazy question. So if you were an insurance company, would you want to insure you?
No.
Okay. So that is how it works. They look at, so in it, the interesting thing that about really all insurances, but mainly auto, it's like they have this, they take all of your data and then they look at it as a whole. So when you got that policy, the data at the time was you didn't have any accidents.
Right.
So then the data changes. And so you have one accident. Okay, well, that's not so bad. And then you have another one. Okay, well, that's starting to be a problem. And then you have another one. And that's 3 in a very short period of time.
Right, but what happens if they don't count the 17 years you didn't have anything?
No.
Yeah, that's not very nice. What if I would have had 1 3 years, another 5 years go by, I have 1, and 10 years go by, I have 1? Then I wouldn't have gotten in trouble? They just all happen to come in a short duration of time.
I think they're pretty much like, what have you done for me lately? So,
right.
You know,
So,
I mean, insurance
by
companies,
law, somebody has to insure you, right? By law, they can't not.
Well, nobody has to. Texas Fair plan can do it. I mean, there's policies out there that have to say yes, but they're subsidized by the government. Right. But no commercial company has to do anything. They don't, as long as they're treating everybody fairly. In other words, they can't single you out. But if they have guidelines that say no, cancel after three accidents in 3 years, mm-hmm. Then if they have it in writing and they do that to you, they have every way they can do that. There's no law. And that's the thing, is that they've got rules based on bringing you in. So in other words, when I go rate you to get you a new policy, there's going to be, I can tell you that Encompass, that was the Allstate company, automatically going to rule you out. You've got 3 accidents in less than 3 years. You're gone. You're done.
Oh, I forgot to mention the $78,000 pickup truck that got stolen.
Yeah, I think you might want to call Fred Loya.
Could I just put the insurance under somebody else's name?
No.
I don't own a vehicle.
If you want to attempt fraud, I guess that's possible.
No, so that's not a good thing. I don't do good in jail. That wouldn't work.
Yeah, no. No kidding.
So I better get my checkbook out.
Yeah, it's going to be unpleasant. I would say buy a Ford Fiesta and just sell your RV and hang in there for 5 years. Mm. So let me, while we're on that, on auto, it's technically 5 years. They keep track of tickets and they keep track of accidents. And that's whether it's at fault or not at fault. They keep track of everything. So if you have no accidents whatsoever, no tickets in 5 years, that is the very best discount you can possibly get.
Okay.
And so I have people who have 2 cars, 2 drivers, and they're paying, $50 a month for full coverage because they haven't had an accident in 5 years. But I had one person driving 1 car, and she was paying $700 a month because she had an at-fault accident every year for 5 years straight. I had to go to the carrier that I don't like, but I have them for that reason. And it was painful, and she was happy because she was paying $900. So I actually saved her $200 a month. Right. But I just told her, I told her, you really should just use Uber. You don't need a car. You don't, for what you're, money. Yeah, she was paid, I think she paid $30,000 for the vehicle, and she's paying $10,000 a year in insurance. Just Uber everywhere. You'll be fine.
Exactly.
You shouldn't be on the road.
Anybody else have any questions while we're in on that?
Hey, yeah. Let's say I'm talking to a first-time home buyer. They're trying to decide whether to rent or to buy, and we're looking at the overall payments. How do you handle that as far as how much insurance would be for them? Do you ballpark it? Do they need to ask an agency? What would you recommend?
Well, I mean, for purposes of purchasing, I wouldn't say you don't want to get quotes without having a contract. I mean, that's going a bit far. Typically, the mortgage officer has a good feel Most of them that I work with, they somehow manage to get fairly close most of the time. And then they do call me when it's a weird house, when there's something unusual, maybe that. So here's a couple of things to watch for. If the house is particularly old and if it doesn't have central heat, that's a problem. If it has asbestos siding, it might cost a little extra than normal. If it's brand new, hey, $60 a month will typically take care of it. Brand new homes are cheap. But the older they get, a little bit more they get. So $100 a month is probably decent if it's a $200,000 house that's 30 years old. But even everything, if they have bad credit, then it might be $150 a month.
Right.
Because insurance companies look at credit too. So if you're working with a good credit person, with a house that's not too old and in really good shape, then yeah, you can usually figure like, was that 1% mark, sort of kind of, $100 a month maybe, at the most. But
Okay.
I don't know how the mortgage guys do it, but they seem to be pretty good at it. So I would definitely talk to your mortgage person about it.
Thank you.
Anybody else have any questions while we're on here? What about, I know a few people on here are military discounts from any of these companies, anything like
Most
that?
of them do. I know that active military, USAA, as far as auto, does really, really well. And I'd love to say something negative about that, but I can't. They're great. I mean, they do a good job for our active military, and I really appreciate that, quite frankly. Now, as soon as you're out, all bets are off. You never know. It just depends on your record. They're going to treat you just like everybody else for the most part. And so there's been numerous times when I've been able to save money for people that have been with you. They're like, I've been with USA for 25 years, and I just saved them $2,000. I mean, I literally had one guy just about lose his mind. Kind of the same reaction Paul just had about his cars. It's just like, yeah, you kind of want the insurance company to be loyal, but here's the deal: they're just not. They're loyal to their shareholders. They have to be. I mean, it is a business and they have to honor that business. And so just because you've been there a long time, it really is, what is the situation right now? What is your situation? And this is what the rate is. Whether it's a home, whether it's an auto, it doesn't matter.
Okay. Awesome. Well, in closing, anything that we didn't ask you about that you think is important for people to know?
I think the main thing is ask questions. So here's what I see the most that horrifies me is that the lenders out there, and I work with a lot of loan officers, they usually have some agent like me or somebody like me that they work with, they refer everybody out to. And so what they do is they send us enough information that we're able to run a quote, and then they shoot the quote back. And sometimes they work with more than one person, so they send over 2 quotes to their buyer. And the buyer, the buyer doesn't know anything about insurance, so what do they usually do?
They just, take whatever
they look at the price, right? And they take the lowest price. So the loan officers that I work with, they know that I may be the low price, but I might not be, because I include all the water coverages. I make sure I don't sell a policy that I don't like. I've literally told one guy, he called me, he had a mobile home on the side of a hill out near Medina, and it was like over 25 years old, and I can do it, but it's a bad policy. And I told him, I said, look, here's the price, but I do not like this policy at all. It's not really going to cover you well. I think you should at least shop around. If you don't find anything else better than this one, then definitely call me. But honestly, you're better off with something else, because this policy kind of stinks. And he was like, wow, I can't believe you just said that. Again, I was raised that way, tell people the truth. I ended up getting about 5 or 6 referrals. I ended up insuring his daughter, and I ended his cars, his boat. So I got a whole bunch out of it.
Yeah.
But it was, and that's how I believe. Like, when you tell the truth, the world kind of just thanks you for it. Just be honest and do the right thing, and it all works out. We don't need to play shenanigans for anybody. We should be good at what we do, right? But beyond that, we should just do the right thing, do the best we can, treat people right, and it's all going to be good. But so my point of all that was, ask really good questions. Don't just go to the lowest price, because the lowest price sometimes means something's missing.
Right.
It doesn't always, but it can. last story. I know I have to tell stories. This guy, he was like, well, I got a Liberty Mutual policy and it's $100 cheaper than yours. I'm like, well, I know Liberty Mutual, they're a great company, but if they're lower than me, something's missing, because I can tell you they've never beat me before. And so he sent me that. He goes, well, I'll send it to you. I said, okay. So it turns out that they didn't include any water coverages at all. So the only water coverage they had was a sudden and accidental, but there's no foundation water. There was no slow water leak, seepage, and there was no water sewer backup. And even maybe not worse, but just as bad, the roof settlement, what they call it, on a roof, you can get replacement cost, you can get loss settlement. And loss settlement, when they say that, that means if your roof is 10 years old and the life of the roof is supposed to be 20, they're going to settle 50%. They're going to give you 50% of that roof. Yeah. And that's horrible. That's scary. So all the ones I sell are replacement cost. And if it isn't, I'll tell you, but I've only sold one. And that was a guy that needed a low price. He wasn't going to be able to buy the house without a really low priced insurance policy. So I told him, I said, well, I don't like this policy, but it is the best price. And so he went ahead and got it. And he just told me next year I have a note to call him back and put him in a better policy once he's got kind of his life in order. Right. And does that make sense? So that, I guess that's the gist of it, is don't just look at it and think because the price is good that it's good.
Yeah, that's what always scares me. It's like, oh, the price is low. What's wrong with it?
Missing? What's missing? Yeah. And I'll look. I mean, honestly, if somebody says, "Hey, can you look at this quote and tell me what you think of it?" I'm happy to do it. Doesn't bother me. I've looked at a lot of quotes and ended up not getting business out of it, but that's okay, because again, do the right thing, take care of people, treat them the way you want to be treated, and it all works out.
Perfect. And I did just drop Danny's information into the chat. So if you have any questions or anything that you want to ask him, email him. His email address is on there and everything. So feel free to send that over to him and let him take a look at it.
Well, thank you for doing that. It's very nice of you. I love working with you because I know you feel the same way. Education based, do the right thing. So I really appreciate you.
Not a problem. Well, we appreciate your time today. And
oh yeah, this is fun.
And thanks for joining.
Do this again in a few months or something.
All right, sounds good. All right, stay safe and take care.
Bye, Lauren.
Bye-bye.